Hey there, traders. This is Chris Keene from akeenpointofview.com. Most of the majors moved up after the FOMC, but could not hold their gains, and we are sitting at or below the spike highs on most of the pairs. It will lead to an interesting end of the week while traders digest this information, this FOMC information, and see if we get a pullback and a little bit of dollar strength here, or if we break above. Let's start off with the EURUSD. You can see the EURUSD moved up and tested the top of this ascending trend line right here, right now at 130.90. The pair couldn't establish any momentum above or below. So now the key to trading the euro is to see if we get a break of this trend line around 130.90, or the old past so a resistance zone that now turns support between 130.20 and 130. It'll take a break above or below these levels to really kick things off. A break below the levels, and we could see a test back of the 50 fib at 128.92. A break above the ascending trend line, and we could see a move up towards the 131.40, 131.80 level. This is a key resistance level, and the break does change everything. We can see a cyclical move higher towards the 133 level. The next pair we're going to take a look at is the Great Britain USD. As you can see, the Great Britain USD has been moving up. And broke above the crucial 161.30 level, but the pair couldn't gain any traction above 161.30, and you can see that it quickly fell back down. Well, it moved up to 161.80, but then it fell back down, and now is once again below 161.30. A hold below 161.30 does favor a push lower, and we could see a cyclical move down towards the 160.50 and the 161 level. 161 level. In the short term, but if we do get a bounce back above the 161.30, we have to watch for a break of 161.80 for a move back up to the 162.75 area. So the key to watch is the 161.30 in the in the Great Britain USD. The next pair we're going to watch is the Aussie USD, because you can see this descending trend line that we have spoken about before that has capped the price action heading all the way back to the midpoint of last year. The pair had broken above it, moved to 105.50, and it spiked up once again to test the ascending trend line that used to be support, which is now resistance, right here at 105.30. This 105.30 level held quite well, and this trend line has proven to be quite an indicator of, I guess it's a bull bear line of some sorts. But now that the pair is back below 105.50, and more importantly below this descending trend line, it'll be interesting to see if we get momentum back towards the 104.60 and then ultimately towards 104. What we have to watch to see is if we get a break of this area around 104.87, and that should dictate the price action. The New Zealand USD still climbing the steps higher, but you can see that right here at 84.50, the pair has found a bit of resistance, and that's not just pulled out of the thin air. You can see that as the yearly high, and a break of that, though, would expose the pair to these next step higher at 85.58 and 88.84. Now, if this pair holds or not, I'm not 100% sure about this level here, but we will watch the price action. If we get a nice daily close down or a 4-hour close down, we could go lower, and looking for a break at 83.50 could get us back in this 83.50, 81 range. Now, the CAD, on the other hand, you can see boom, 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 continue to slowly glide lower, and it did break below the 98.70 level, but we didn't get much momentum there. So now we're going to watch this 98.70, 97.64 area to see what kind of price action we get there for the bounces up and down, up and down. Move up to 98.70 could find sellers, and we could see another push lower. But I wouldn't bet the house on these levels, because there is quite an exaggerated move there. And if we ran a fib level off that, the pair would, if it ran all the way back to the 50 fib, it gets us all the way up to the 99.37 level, which is quite a distance from this particular point. The last pair we're going to look at is the AUDJPY, just because this pair keeps pushing higher, and you can see that it has resistance up at 84 and support down at 83.20. We're going to watch the bouncing here in this level, and we have to keep in mind that heading into the weekend, we have the elections in Japan that could influence the price action in this pair. So keep an eye out, and the 84 level is break of the 84 level could really open this pair up to an exaggerated move higher, the first level being 85.50. Break back in the wedge, and we can see a push down to 81. All right, everybody, good luck trading. This has been Currency Watch. Keep your eyes on the ball, and remember to keep your trades keen and to play it safe.